strong community here. I know how difficult it is to make cryptocurrency communities, so great job. And there are a lot of really great questions you came up with ahead of time. I'm sure people will have many amazing questions coming in as well. So this should be a really great time.
Yeah, for sure. And well, first and foremost, thank you for the comment. A lot of hard work has gone into building this community, and we have a really awesome team. So I'm glad you noticed. And obviously, we have the script of questions that you and I have both approved. If you're we're going to have some researchers and community members that have submitted questions that I've outlined in the researcher section ask those questions as well. However, if you're okay with questions that aren't on the script being asked, I'm more than happy to call on raised hands at the end of the AMA. It's completely up to you.
Should be totally good. One thing I want to set expectations for the beginning though is Monero is like Bitcoin. There's no company behind it. There's no foundation behind it. So I don't fully represent Monero in the way that no one really represents Bitcoin. But I work for a popular wallet, Cake Wallets, and Monero.com, and I've been involved with the community for quite a few years. And so I saw you had a need for someone to come on and answer questions about Monero, and so here I am.
Yeah, certainly. And so the way, when I start the recording, then the way I'm going to intro you is, hey, this is, let me ask you, how would you like me to intro you? Because we did kind of market this as we're featuring Monero as you asked us to do.
Sure. So you can say that I'm the VP of Operations at Cake Wallet and Monero.com. I think that would get the point across that we're very involved with Monero as well.
You're the VP of, and sorry, Justin, your mic keeps cutting in and out a bit, but you want me to say that you're the VP of Operations at cake.com, cakewallet.com or cake.com and Monero?
Cakewallet.com and, Cake Wallet and Monero.com.
Cake Wallet and Monero.com. Cool. Alrighty, and then I'm gonna give our community members a couple more minutes to trickle in, and then we can get started.
All right, does this sound better?
It does sound a bit better. So I want to just make sure that your audio isn't fading in and out the way it was before, but you sound great. And I just DM'd you a quick, just to confirm really quick. So if you can open that before we get started, that'd be great. Alrighty, I'm going to start the recording here, and looks like we have quite a few members trickling in now. Justin, let me know when you're ready. Justin, you there? Acti, are you there? I want to make sure that I didn't lose connection here.
Yes, I'm here. I see Justin unmuting from time to time. I think he's switching around his mic input and all that, dialing it in.
Sweet.
Yeah.
Awesome. Yep, Justin is going to be back in 1 second, guys. He's just grabbing a mic, I'm assuming, getting his audio all set up.
Okay, does this sound better?
Yes, you sound great, Justin.
Okay, thanks.
Sweet. Good afternoon, Whale Coin Talk community. I'm really excited today. We have Justin, VP of Operations at Cake Wallet and Monero.com with us today. He's here to talk to us about the first privacy coin. We all know it as Monero. Justin, I want to go ahead and get started here. Before we dive into what Monero is, the history of it, the fundamentals, all that good stuff, give us a brief background of yourself, who you are, how you got to be working in the crypto space, how you got to be working with Monero, Cake Wallet, all that good stuff.
Awesome, yeah, I appreciate being here, and I really enjoy the community that you've formed here. So thank you for all the hard work you've put into that and the questions ahead of time. People have certainly time to come up with other questions as well. So my name is Justin Ehrenhofer. I have been involved in cryptocurrency privacy since about 2015. That's when I found Monero. Monero actually launched in 2014, so I was a year late, but oh well. And my introduction to private payments was actually when I used cash to buy a Walmart gift card to pay for a VPN. And I thought, well, this is a little bit cumbersome. Ideally, there'd be a more digital way to pay for goods online. And Monero really fits that niche pretty well right now. So I worked for 2 years actually in cryptocurrency compliance, believe it or not, focusing on anti-money laundering cases. And for the last 8 months or so, I've been working for Cake Wallet. For those familiar with Monero, you've probably already heard of Cake Wallet. It is a non-custodial wallet for Monero, Bitcoin, Litecoin, and recently Haven. And we also split off a Monero-focused version that just has Monero called Monero.com. So I've been involved in the Monero ecosystem for quite a few years. I previously organized the Monero community work group, and I organized a lot of the Monero community events at the DEF CON Conference Village, and also other Monero conference planning, various things over the years. I also made the Breaking Monero series, which a lot of people have used to learn more about the downsides of Monero's privacy so that we can find these issues, squash them, and make Monero better and better over time to improve its privacy. So that's a good background of my of what I've been working on. I've been involved in the other parts of the cryptocurrency ecosystem for a few years as well. In 2017, I became a moderator of the cryptocurrency subreddit, for example, and I haven't left. So I'm familiar with quite a few other communities as well, but privacy is very dear to me for cryptocurrency in particular. I think that money should be, by default, fungible and private, just like cash.
Beautiful. And with that said, Justin, it leads to our first couple of questions. First, why, and more importantly, or excuse me, you answered when, why was Monero birthed, and what are some reasons that privacy is so important now more than ever before?
Good question. So when Bitcoin started, a lot of people thought of it as quite private. You have this random string that appears when you send transactions. It's not your name. It's not your social security number. You don't need to register with someone to get an address, right? Overall, it was thought of initially as quite private. And so it was taken up by various groups that needed transaction privacy and needed censorship resistance. Of course, in Bitcoin's early days, that was just a bunch of nerds and darknet markets to start. So we've learned, a few years after Bitcoin launched, is that people started actually using it. It started being on regulated exchanges that, hey, you can pretty trivially try to trace transactions and see where money flows are going. Addresses are always public. If I send money to your address, I know how much money is in it. I know when you spend the money I give you. Really, there's all sorts of different consequences. And people built out pretty robust tools. You can think of blockchain analysis companies like Chainalysis, Elliptic, CipherTrace. There are dozens and dozens of these companies that sell data based off their best guess onto where funds are going. And Monero was formed around the idea that let's do what we can to make this a little bit harder. So when Monero first launched, it used something called stealth addresses, which hid the addresses completely. So if you send money to someone's Monero address, that address itself never appears in the blockchain. And that alone is a huge difference and a huge privacy improvement. You can't just look up a rich list and see what it looks like.
And it also tried to obfuscate the actual transfer of value, so the transfer of certain outputs, through something called ring signatures. Now, they sucked at the time. I'm sure we'll get more into what ring signatures are and why they sucked then and why they're still not perfect, but they still offer useful privacy properties. But ultimately, it was formed on the idea of let's try to have better default privacy to everyone. Monero has a very weird launch story as well. It was like Bitcoin, launched by anonymous founders, and the anonymous founder isn't around anymore. In fact, Monero was a code fork, so it didn't continue the same blockchain, but it took the code of another project, which was very scammy. They pretended that they launched 2 years earlier than they actually did. Said, hey, the code looks really cool. This is a cool idea. So let's take the code and let's run with it with this new project. And then ironically, the person who said that to launch Monero in the first place under the name BitMonero originally also ended up being impossible to work with. So it was forked from them again to continue the chain by the Monero core team as it's now known today. So Monero has a very interesting back history. It was not actually the first attempt ever to try to add some privacy. It was. I don't think it's fair to call it the first privacy coin, so to speak. It was just the first that really took these default privacy properties and made them so vast. Up until this point, there were other projects before Monero launched called like a non-coin. They tried to relay transactions through I2P and Tor, and certainly that's a less comprehensive thing to do, and you can do that on Bitcoin as well. So that project largely faded away, and you had other projects around the same time like Darkcoin, which is now known as Dash, which included some coin join mixing type privacy optionality that you can run with. So I would say around 2014 was the time when people started looking at privacy more deeply, thinking, hey, maybe what Bitcoin currently has in its tool set is inadequate, or we can have a better shot at it. And since Monero launched, it's been the cryptocurrency space's leading privacy-focused project, and it just has never backed down from those ideals. And then, sorry, and your last point of why privacy is more important than ever, I would say people are using cryptocurrencies more and more than ever. And back in 2014, I would try to explain fungibility to people, and no one would have any idea what I was talking about. But now, because NFTs have become such a big cultural movement, people know what non-fungible means now. They think, oh, unique piece of art, or at least some specific identifier for some sort of art or digital good or something along those lines. And you really need privacy in order to have fungible cash, and money is just so much better when it's fungible. Like, sure, we all could live in a barter system where we all trade NFTs back and forth to buy groceries, but by and large, that's significantly less efficient than if you just have an asset that's always worth the same as any other of the same value, and you can just use that to define value and transact back and forth. So that's one reason. Another thing is, as we get increasingly digital, we don't want to lose out on privacy that is afforded by cash. At the moment, in most countries, you can use cash, buy whatever you want. There's no, record on the actual bill itself where the money is used for, but it's still, so like you're protected in a way using cash. But if you're using a digital, Bitcoin sending money back and forth, you probably don't have those same privacy protections. And you likewise don't have them if you're using credit cards or whatever. So there's just a lot of people that want to keep this information, like they don't want to give up this privacy as we move to a digital world, which of course before Bitcoin you had to do because you had to go through a regulated entity.
Beautiful, Justin, and a lot to unpack here. I want to start with playing devil's advocate. What does the Monero community and even yourself say to those who argue that this privacy coins in general, are mainly going to be used for illicit purposes, for crime, all that stuff?
I mean, it's a concern that I know a lot of people have, but in practice, it is not what's happening with Bitcoin. It's not what's happening with any other cryptocurrency out there, and it certainly isn't what's happening with Monero either. I mean, you have good tools; they're going to be used by bad people, and in Monero's case, a lot of the darknet markets, a lot of illicit activities such as ransomware, have switched to or are exclusively using Monero at this point. So it's definitely true that criminals use it. But ultimately, this is the cryptocurrency space. The vast majority of activity is related to speculation, as I'm sure everyone here in the chat is aware. Most people just like to send the money back and forth, test, trade it, speculate it, try to make money. The same goes for Monero. Whether people like it or not in the Monero community, that is the way it is. And also you have all sorts of other people that use it for completely legal purposes, like open source software development, maintenance of public infrastructure, all sorts of real reasons that people would want to hold a digital asset that just doesn't leak everything to everybody all the time. So I don't think there are too many people out there that are going to die on the hill of saying there's no illegal activity in cryptocurrencies at all, because that's certainly not true. But to say that there are no uses whatsoever, or even that criminal activity is the majority, that just is demonstrably false in pretty much all cases. Chainalysis, for example, investigates the percent of Bitcoin transactions that, in their opinion, are related to crime, and it usually hovers around 1% or less a year. So it gets a lot of talking point among governments and the like. But frankly, there are many tools and ways that they can try and go after the real criminals that are involved without ruining it for everybody else.
Got it. And we all know that the Bitcoin blockchain is in fact not anonymous. And I also believe that as these forensics that are used to determine who owns what get better and better, it's going to be easier to find out which wallet is owned by who. So apart from the positive use cases that you just listed there, what are some other value propositions for a privacy coin, positive reasons why someone might not want to have their identity revealed or how much money they reveal on the blockchain?
I mean, it's a good question, because I would say some people have no concern with that at all. And I think to them, I would caution to people who think this doesn't matter, because in your normal life, you aren't likely operating entirely on a completely transparent blockchain, right? You aren't getting paid in, paying rent, buying groceries, doing all sorts of things like this using a completely transparent blockchain. You likely are doing that even through just a normal bank account, or you're using cash for that. There's something where the rest of the world doesn't get to see everything you do. But let's say you want to make, it's almost laughable at points to think about cryptocurrencies as something that people would actually use for day-to-day transactions sometimes, but it's something that the Monero community very much believes in, is at least the ability for you to use Monero for those sorts of things. So let's say you make a political contribution to one of the local candidates that you support. That sort of thing appears on a permanent public record if you're using Bitcoin. And it could be a completely legal contribution. You follow all the campaign rules. It's reported the way it's supposed to. But now your name appears as a higher risk indicator for someone, and you can't open an account with Coinbase anymore because you made this donation. Even if they're not, again, this could be completely above board. They just don't, they're a private company, and they don't have to do business with every sort of support. Like you're not entitled to a Coinbase account, right? It's not an amendment right that you have. So these sort of things really confound across the board. And I think that most people aren't, like the level of sophistication that can be done to investigate your life through tracing all of your transactions is very, very scary. And so I think the value in just saying, you know what, I'm going to use Monero. It's going to be fungible. I don't need to worry about receiving or sending tainted coins. I don't need to worry about someone learning my wallet address. All these possible concerns that people have, they just go away, right? You can just use it normally. And I think the peace of mind is ultimately what the vast majority of Monero supporters enjoy from using Monero.
And so the idea is we're using cash, but better cash on the blockchain. Is there any way at all for companies or powerful entities to analyze our data and map our behavior if we're strictly using the Monero blockchain?
That's a very good question. I would say there are things that people can try to do, but it makes the baseline protection significantly greater. So it means that if you're North Korea receiving billions of dollars of ransomware payments every year, then yes, people are probably going to spend a lot of effort trying to investigate you, and they're probably going to go into the weeds and try to track everything and be extremely methodical about it. If you're just someone who's just sending money back and forth, you have far greater privacy protections using Monero out of the box, not even thinking about that, than if you used any other tool, even with considerable effort. So it's not that it's impossible. I mean, I have a whole series called Breaking Monero, and if people are really concerned about the edge cases and really diving into the weeds, I strongly recommend watching that. In particular, the episode on what are called poisoned outputs. I think you had a question about that later. But Monero isn't perfect, but it's certainly, like, I don't want people to make a false equivalence and think, oh, well, since it's not perfect, they're all the same. Like, no, they're not all the same. Monero by far has the best base level privacy protections, but again, it's not perfect. And I think the Monero community is very clear about the fact that it's not perfect most of the time.
And community members, I went ahead and shared that Breaking Monero website on our main chat, excuse me. Justin, so kind of taking a few steps back, technically, can the sender or receiver's IP addresses still be tracked despite the obfuscation of all the transactional data?
Yes, that's a good question. It's actually best to think of IP data as separate than the rest of the transaction data because it's handled completely different, right? For the blockchain itself, on the Monero blockchain, on the Bitcoin blockchain, Ethereum, whatever blockchain you're using, no sensible implementation stores your IP address on the blockchain, right? So it's not really the case that we need to worry about IP tracing as it relates to looking at the Monero blockchain itself. I mean, there may be some weird edge cases where the reason you learn an IP is related to some on-chain transaction, perhaps, but and chasing that lead. But ultimately, Monero protects the IP address for sending transactions, which is what most people are concerned about. The idea of breaking the association between the real IP address and an actual transaction record that is stored on the Monero blockchain. So you can do this in theory even without other robust privacy tools that Monero offers. But let's just focus on what Monero does for now. Monero is the largest cryptocurrency project to implement something called Dandelion++. This means that if you're running a Monero node or you're connected to a node that supports this, the node will send a transaction out to the rest of the network in a way, because of course, hey, I want to make a transaction, you need it stored on a blockchain record somehow, that information needs to get out to people, right? So how do you get it out to people safely? And Monero uses Dandelion++ for that, which kind of replicates a sort of mini Tor-like relay experience to get the transaction out a few hops before it really fluffs it out to everybody. So that's the base protection. That's the bare minimum level of protection that you're going to get if you're running your own node. And you can also configure Monero to run through Tor or I2P as well on top of that if you really like. And I know that many people do use Tor for that. If you're using a lightweight wallet like Cake Wallet or Monero.com or even the GUI wallet, sometimes the official GUI, and you're not running your own node, you should be concerned about the connection between yourself and the node that you're talking to. But again, you can just run the wallet through Tor, make that connection, and then not only do you get all the on-chain privacy protections that you get from Monero, but you also get the IP protections of Tor or Dandelion++, depending on the case. So again, it's hard to answer just flat yes, but the best answer is Monero, by default, has the strongest protections for broadcasting transactions of any major cryptocurrency network, and it supports all of the anonymizing networks like Tor and I2P that you would like to use in broadcasting your transactions and syncing data. And then, since Monero has the least amount of blockchain data revealed on chain, it means that if you leak your IP based off doing something dumb or something, I'm not sure, then you aren't going to be leaking all sorts of other information, such as what address are you querying, or other basic things. Those again aren't really a concern in Monero, so we do everything we can to keep the risks as mitigated as possible, have the strongest defaults, and make it so that information doesn't just keep leading to learn to other leads.
So Justin, we've already talked about dozens and dozens of reasons of why transparency is a good thing for individuals. Are there any downsides to a lack of transparency?
I mean, certainly. If you, it makes everything complicated to start, right? Like, if let's say that you pay me money on the Bitcoin network and I need to give you money back, right? In Bitcoin's case, I could be like, oh, I know your address. I'll just send it back to the same address it came from. And boom, done, easy. In Monero's case, if you send me money, I don't know your address, right? So I need to ask you out of band, hey, what's your address, before I can send money back to you. So there are some practical limitations as it relates to sending money back and forth. But I mean, there are cases where people want transparency. So if you want transparency in Monero, you can still get it, but you have to share information out of band. So I have to give you a special set of strings so that you can look on the Monero blockchain and basically decrypt the portions that are relevant to me so that you can see them. But again, no one else would be able to see them. So I would say in practice, there sometimes are some hurdles with, by losing the assumption that everything is completely transparent. You have to have separate keys that are shared in different ways sometimes, which can make implementations a little bit more complex. Or if you are wishing that the government had transparency over its finances or whatever, you likely would want a Monero-like implementation where more information is public, which you can do, but it's obviously easier just to use a transparent by default blockchain if the entire point is to provide auditability to the public.
Justin, earlier you mentioned that there are positives and negatives to the ring signature technology, which keeps Monero private. I was curious to know more about that, and also from a high level, what is CryptoNote? How do ring signatures work? And how does ring CT work?
Sure. So ring signatures make it hard to know what the real source of funds that is being spent is. So again, so for every time for Bitcoin, every time you spend money, you spend what's called an output or a UTXO. You take this chunk of money, you effectively destroy it in spending it, and you make usually two new ones. You turn it into one to the recipient and one is changed back to yourself. Monero works with the same UTXO type model, but the difference is we don't know if an output is spent or not. So we don't really have a list anywhere of UTXOs because we don't know which ones are unspent. It's just a big list of outputs. So when you send a transaction to Monero, when you want to spend a source of money, you can think of this again as like a dollar bill or a one-time use piggy bank you got to break open to use. We obfuscate that real spend, so the real source of funds is hidden among 10 other possible sources of spends. So you get to look at the Monero blockchain as you send a transaction. You have your real piggy bank next to you saying, okay, this is what I want to spend, but you're going to grab 10 others and say, okay, well, all of these 11 total are possible spends in this ring, and no outside observer knows which one is the real one. And that number is actually being increased to 14, what are called decoys or other people's piggy banks, so to speak, next month with Monero's protocol upgrade. So it's getting even larger for better privacy. Now, obviously, this isn't perfect. You're not spending every possible source of funds. So it's certainly non-ideal, but it does provide the highest degree of base level privacy of really any cryptocurrency project out there. And that's generally how a ring signature works. Again, that this output is not tied to an address. It's not saying, oh, these 11 possible addresses are sending money. That's actually not correct because there's no association between the output and an address. It literally just is, hey, this output may be spent in this transaction along with 10 others. But again, there's no connection to the actual addresses, which makes, in practice, tracing much more difficult than if you had known an address. And then another important point is that it's non-interactive. So sometimes you might think of a coin join or mixing implementation where you need to specifically talk to other people in order to coordinate sending a transaction that makes it ambiguous what the real source of funds was or where the funds are going. In this case, for Monero, it is done entirely offline. So you don't need to know the other person. You're making it appear as if you're spending their funds. You don't need to talk to them. You could do this entire signing offline as long as you had a copy of the Monero blockchain. That is a huge difference between Monero and other interactive privacy solutions like mixers, like you might think about for Bitcoin. I know sometimes a lot of people mix up ring signatures and mixing. The big difference is that Monero is non-interactive with its ring signatures, and Bitcoin mixers are interactive. Only the people that opt in to use that mixing tool are part of the anonymity set. Meanwhile, if you're using Monero, you're just adding to it by default, and you get to benefit with everyone else. Ring CT is an adaptation of what's poorly called, in my opinion, confidential transactions for Bitcoin. Despite its sweeping name, all it does is hides the amounts in a transaction. It makes them, unknown. That was proposed for Bitcoin. They decided not to implement it for mostly complexity reasons. And Monero was like, you know what? We're willing to make this trade-off. So Monero took CT for Bitcoin, adapted it to work for Monero, and so it's called Ring CT, Ring Confidential Transactions. So you can think of Ring CT as consisting of both, the ring signatures of Monero and the confidential transactions or hidden amounts portion of Monero, so that you don't know what the source of funds is, you don't know the sending address, you don't know the receiving address, and you don't know the amount.
Understood. And moving on to adaptive block size, wanted to know what exactly that means, and more specifically, why it's important for keeping transaction fees low.
Yeah, that's a good question. So Monero is best known for its privacy properties, of course, but it's not all that has happened with Monero. It also has this cool thing called an adaptive block size. So Bitcoin has, it's not a 1 megabyte limit, but it's known for having a relatively small limit on the maximum number of transactions that can go into a block, or the max size is like a virtual size. So there's all sorts of complicated components of that as well now. But Monero decided that it didn't want a single specific number as a cap. Instead, we wanted to have kind of stretchy parameters. So the more you try to stretch in a direction, the more it pulled back. But ultimately, it still allowed you to keep stretching. So Monero allows very short bursts. So if you have a Black Friday event, for example, it allows people to send a lot of transactions in one day at relatively low cost, so long as it regresses back to what is set as a pretty competent value. And the reason that Monero is able to actually continue doing this in the long-term future is because Monero has something called a tail emission as well. So if miners decide to make huge blocks for whatever reason, we can penalize them by taking money out of their newly emitted funds, sort of inflation, so to speak, money coming from the protocol. So that way they need to actually receive a high amount of fees to make it worth their time to exceed the amount they're losing from the protocol itself. So Monero is designed in a way to allow for more flexibility, both, I would say, a lot of flexibility in the short term in order to make large spending days possible, and it allows medium flexibility in the long term to sort of continue growing. And the bet there is really that technical innovation will continue with storage space, with CPU efficiency, with bandwidth. And so the idea is we shouldn't necessarily keep Monero at a certain fixed amount of growth. We can allow it to scale as well according to, what many members of the community feels a realistic parameter for scaling. So that's largely how Monero works, although there are all sorts of complications as well to Monero's, like the specific algorithm that allows Monero blocks to grow or shrink based on demand.
Got it. So it's like adding more lanes to a highway during peak traffic hours.
Yeah, it's like a reversible set of lanes, right? Where you can turn them on when you most need them, and otherwise they get turned off.
So Justin, since fees are lower folks are able to technically spam the network, and you explained how Monero gets around this problem. I'm curious to know specifically, right, are all miners penalized if the block size gets too big, or is it only those that are spamming the network?
So, I mean, ultimately, the miners are the ones that confirm transactions. So, in some ways, you need to hold them accountable for what they will sign and put into a block. So, if you had entities out there that were sending all sorts of Monero transactions, miners would ultimately be the ones that determine whether or not it's worthwhile to include those in the next block. And one way that Monero helps nudge miners in a certain way is through penalizing them for making blocks pretty large. So the indirect effect of that basically is, in order for you to send transactions to consume the, more and more block space, you need to spend more and more money in order to make the miners incentivized to overcome the penalty, if that makes sense.
Got it. But isn't this stuff happening autonomously? Like the miners aren't, those that are running nodes, or rather those that are CPU mining, aren't choosing which blocks to let in or not let in, right? I guess I'm trying to wrap my head around the technical side of things.
Yeah, that's a good question. So ultimately, if you mine a block, you actually do have say of what transactions get in. In practice, what's going to happen is either you are mining using a pool, which we at this point we don't recommend because there are better options for Monero now, but you mine still with the centralized pool, and likely the pool would be the one that would indicate what transactions to include, and so you kind of be beholden to them. But if you were, let's say, solo mining, just to make clearly go to the other end, you basically have full control if you mine the block in terms of what transactions actually get included. And so you could literally sit there and be like, this one, not this one, this one, not this one, if you really, really wanted to. Mm-hmm. In practice, what happens is that Monero's, the code involved in Monero will make these selections for you. But actually, you can't prevent network participants from running own versions of their software that try to do different things, so long as they're compatible with the other nodes. I mean, obviously, you couldn't just add a transaction saying, I mint $1 billion for myself. The rest of the nodes would say, well, that's not valid. You can't do that. But if you were saying, hey, here are these 1,000 transactions in the mempool, I want to create a block that only contains 5. Like that technically is allowed by consensus rules. And so if you wanted to be a miner that did that, in theory, you could, but you're missing out of all the transaction fees that you could have included in the block but didn't.
That's clear. And I really want to talk about Monero mining. I'm very interested in it personally, and I know I have a lot of community members who have expressed interest in it. But before we do, can you just briefly tell us how Monero's proof of work mining mechanism is different and more decentralized than Bitcoin?
That's a great question. I'd say there's 2 main parts. The first is that Monero decided to, or its community decided to, take aggressive steps at making sure that CPUs were still competitive to mine Monero. So when Monero first launched, it launched with this kind of mediocre, or let's just say mediocre, mining algorithm called CryptoNight. It was good for a few years at basically making every other cryptocurrency blockchain out there the low-hanging fruit to build ASICs for and to run on building ASICs for other networks, and Monero is by and large ignored. But in 2017, when Monero's price went up and everyone else was making a lot of money, people started making ASICs for Monero as well for the CryptoNight algorithm. And they started to consume a lot of the network hash rate, or generate a lot of the network hash rate. So the Monero community said, okay, we have a few options. The first option is to just leave it as is and make it so that Monero is just ASIC mined from now on. Or we could try to come up with a new way in order for us to have better long-term resiliency against ASIC mining, but it would, it's going to be more aggressive. It's going to take a lot more work. And you actually have very different opinions in the community. So Fluffy Pony, for example, which a lot of people know is having a lot of importance to the Monero project. He was a member of the Monero core team. He still is, but he's no longer the lead maintainer of Monero. He even was like, I think we should just accept ASICs at a certain point and try to do that in the best way. But the rest of the community, by and large, was like, no, we want to still continue fighting for CPU mining. And so the decision ultimately was made after a lot of back and forth and thousands of comments on various GitHub issues and many different IRC and Matrix meetings and Reddit posts, that Monero would continue to try and be CPU mining friendly. For the short term, that meant take the CryptoNight algorithm and make some tweaks to it that basically would break an ASIC. So if you had spent all this effort building these ASICs to mine Monero, the algorithm would change slightly so that what you built is no longer functional for Monero going forward. And that was never meant to be a long-term solution. That was more of we're doing the hard forks for these other upgrades regardless. So we're going to impose further annoyance, make the miners upgrade, but this way we'll have a way to keep ASICs off the network in the short term. And the long-term plan was to make a new algorithm, which is now implemented, called RandomX, which is a completely from the ground up new way of creating a hashing function that uses all of the components of the CPU and makes it very difficult to create ASICs for. And now, even to today, and there's no sign of this changing, Monero is using RandomX. It has been using RandomX since 2019, and your CPU is the most competitive way to mine Monero still today. So that's pretty cool. The hope is, of course, that this continues working for many years to come, but ultimately, to some extent, time will tell. But I would say, at least looking back, it's been a huge success over the last few years. So that's the first part. Monero has a CPU mining algorithm so that you don't need to buy custom hardware for it. You could walk to any store, you can buy really any CPU, but the AMD ones are a little bit more efficient most of the time, but even Intel ones work just fine. And you can mine Monero, so that helps with decentralization a lot. And the second thing is Monero developed and ran with an idea called P2 pool. This is proposed for Bitcoin, but it never really got much uptake. The idea is it's a side chain where Monero miners come together, contribute, and share resources among this side chain, and then they submit hashes to the Monero network when they actually are able to find blocks. And so it's a very interesting way. You kind of replicate a lot of the uncle functionality of Ethereum in a sense, but this allows you to have much smaller payouts without having to use a centralized mining pool. And I mean, I wouldn't say it's every benefit of a mining pool, but it's the vast majority of the benefits of the mining pool. And there are no real downsides compared to using a mining pool. So this allows people to get paid daily or so by mining Monero with their normal CPU at home without having to use a centralized pool. And P2 pool usually, at the moment, it oscillates only between about 5 to 10% of the network hash rate. But this is 5 to 10% of the network hash rate that really can't be, imposed in any way, and we hope to keep growing it. So those two things combined, predominantly RandomX and then newly P2 pool, help make Monero very decentralized. You can't really ban Monero mining because you'd have to ban sales of CPUs. So that adds a further element to Monero's censorship-resistant portfolio, in a sense, because you can't just say, oh, eBay, we are not going to sell ASICs anymore. You have to stop all sales of CPUs, which would be unrealistic.
So you mentioned two types of CPUs that are commonly used to mine Monero. I'm curious to know, if I use a CPU that was built in 2000, an old computer that's sitting around, versus using a CPU that was built, I don't know, last year. Obviously, the latter is going to be more efficient in mining. Am I correct in understanding that?
Definitely. Newer stuff is certainly more efficient.
And, are GPUs also used to mine Monero, or have you guys designed RandomX algorithm in a way where it's only CPUs and nothing else?
That's a good question. Some people do GPU mine. You can, you're allowed to, but it's less efficient. So most people do not use GPUs to mine unless you have the hardware anyway and you have free electricity or something.
And can I efficiently mine XMR on my laptop, or am I better off with a PC?
I mean, efficiently you probably can, especially if you have cheap electricity, but you're probably not going to get huge payouts. So, um, there's a difference between efficiency and like actual gross revenue. So you're probably only going to make a few cents, but you may still mine efficiently on a laptop or even a phone. Phones are actually some of the most efficient ways to mine because they're meant to be power efficient, and it's a CPU. So a lot of people have actually tried mining on phones, for example. Each phone would not make you much money, but you're going to be making higher margin on the electricity than you would have using like some other hardware.
And on average, let's say I'm using a CPU that was built, I don't know, like 1 to 3 years ago. How much Monero per month or per year would I be able to mine?
I mean, honestly, probably not too much. I would say usually it's barely profitable. Mining is, by its nature and by purposeful design, a commodity, very boring business. And I mean, think you have this open competition that anybody in the world can participate in and win money. So of course it's going to attract people. And if it's very attractive and there's a lot of profit in it, then you're going to have easy access for people to jump into the competition. And since Monero is CPU mined, it means that people, like the second Monero is profitable at all, people are going to show up and mine it. And the second it stops being profitable, you're going to have people that leave. So Monero mining is usually very, very boring when you talk about it from profitability standpoints, because it's so easy to enter and leave the mining market that usually it is just barely profitable is usually the best way to describe Monero's reward there.
Got it. That was my next question. Like, it must be slightly profitable, otherwise no one would do it.
Yep, basically.
And does CPU mining, this might be kind of an easy question for you, but does CPU mining use more or less energy than GPU mining?
I mean, by and large, the same. I mean, it's there is no straightforward yes or no, so I'm just going to say the same.
No worries. You mentioned earlier that pools are not a good option anymore, or not the best option. I'm not sure which one I heard, but what would you recommend is better? Obviously, you mentioned solo mining as well, but I'm assuming that's probably not the best either.
Yeah, my main recommendation to people is p2pool.io. Again, that's not a centralized mining pool. That's just a website that has links for you to download the software to run it. But that allows you to run the mining software, and if you have access to a Monero node, ideally you're running your own, but you can in theory use someone else's as well. That allows you to mine Monero without having to trust a centralized mining pool. But of course, you can still use a mining pool, like a traditional mining pool, to mine Monero as well. Just please pick, not one of the top 3 or so. Pick a small pool, as people always say.
And how would one go about running their own Monero node?
Go to getmonero.org/downloads, and you can easily run a Monero node from there. The software is called Monero D. If you run, actually, here's actually the easiest way to get started with Monero. If you download the Monero GUI, so the GUI wallet, the official wallet actually will walk you through automatically setting up a Monero node, and it will now also automatically mine P2 on P2 pool if you configure it so that you are contributing to the Monero network, and you'll receive payment directly in the wallet that you're using. So actually, the Monero GUI is by far and away the easiest and fastest way to get started with mining Monero on your normal PC.
Cool. So it's like an all-in-one suite. I can store Monero in a decentralized way, and I can also mine it the most efficient way, or one of the most efficient ways.
Yep. It allows you to contribute to the network just as efficiently as you would have using a centralized pool, but instead of being paid every few months or whatever it would take for the minimum to come into effect on a large pool, you could get paid like every week or so if you're fast enough, maybe even every day, just effectively from the side chain is sort of how that works with P2 pool.
And ideally, I could run this node on an old computer. Does it not matter? And then use the newer CPUs to actually mine the Monero.
Yep, that's exactly right. So what you could do, and what I do, I have an old laptop from 2011 running it's just sitting next to my router. It's a really cheap computer. It's just a really bad i3 dual core or something, like the first gen one. And that's running my Monero node. I did swap it out for a cheap SSD. I don't recommend running this on an old HDD anymore. Just get the cheapest SSD you can find, run the node from there, and then you can use that one node and point all of your other computers to mine using that node. And then you only need to run the one Monero node, everything else connects to it, and you get to mine from all the computers without having to trust anybody else. It's great.
That's so cool. I'm definitely going to go ahead and try that soon. I've been wanting to mine Monero for a while, but wanted to get some more info about it before I went ahead and get started. I have a lot of computers sitting around, and I advise our audience members, if you have computers sitting around that are doing nothing and cheap electricity, go ahead and give it a shot. Sounds like it's pretty user-friendly to use the Monero GUI wallet and go from there. So thank you for sharing with that. Thank you for sharing that with us, Justin. I wanted to move on and talk about Monero's tokenomics structure and how it's different than Bitcoin's. And also, can you explain why there's no supply cap and whether or not that would make Monero a robust store of value and technically making it an inflationary asset?
Sure, we can start there. I mean, so full disclaimer, depending on who you ask, you're going to get different answers, right? So you may find someone who is completely opposed to the idea of any single coin, additional coin coming up for any reason whatsoever. They're going to say this is completely valueless as a result. You're going to get different opinions. And there's going to be other people that say, oh, well, yeah, large inflation, yeah, like, who cares? Whatever, it doesn't matter. So you get people on both sides. Monero takes a conservative, but not as conservative as Bitcoin approach to the supply. So whereas Bitcoin approaches 21 million coins total, and then at a certain point, there will never be any additional coins, at least as the code is currently written. Monero does not do that. Monero says, you know what? It's okay to have some coins emitted in perpetuity because this allows us to have some subsidy for security. We can take this money, we can use it for paying miners in order to secure the network in perpetuity. We never need to worry about it running out, so to speak. So some people might point to that and say, hey, look, you're having money come out of thin air, out of the blue. How is this good? And the reason it's usually not the end of the world, in my opinion, is that, hey, the inflation rates, so the percent of new coins that are emitted each year starts this year at about 1%. It's already started, and it asymptotically approaches 0%. So only if you go infinite years into the future do you have infinite coins. If you go 100 years into the future, you will have something like double the amount of Monero coins as you have now, or probably even less than that. It's not a large growth rate, and that allows the Monero network to continue having security paid to the miners. So, I mean, you can look up all the different Monero issuance rates. On Monero.com, for example, there's a way to get to charts to see specifically what the Monero emission looks like. And for the next few decades or so, Monero actually has lower inflation rate based off the emission rate of new coins than Bitcoin does. So, Monero decided, no, we're not going to just print tons of money with the huge percents forever. Instead, we're going to keep printing money to pay for a subsidy for miners for the security that comes from them, while asymptotically it approaches 0%. So as you get closer to infinite time, the percent gets smaller and smaller and smaller. As it relates to other tokenomics in Monero, there is no pre-mine, there's no dev tax, there's none of that. There's nothing whatsoever. 100% of all of Monero's issuance has gone entirely to miners, just like Bitcoin. There's no dev fund, there's nothing like that. The entire community has been supported through people raising money through donations in order to work on various projects. And of course, because Cake Wallet contributes from it benefits from the Monero ecosystem, we'll give back, we'll help pay for developers to work on things as well, and so will other participants in the Monero ecosystem.
I love to hear that. Justin, we touched on fungibility earlier in this AMA, and as most of us know, in order to have a robust, decentralized asset, it's very important property. I'm curious to know what your thoughts are on Bitcoin's fungibility and why it's technically not as fungible as most people might think, and why Monero is a truly fungible asset class with respect to its privacy.
Good question. So fungibility is a weird thing as well, because a lot of you can use Bitcoin wallets today, and you might think fungibility isn't a problem, but if you take a step back and realize, okay, my address and every transaction I do is being assigned risk scores by a dozen or more companies that I don't get to argue with them about why my transaction is rated as a higher risk score. I'm not entitled to an account with any of these services. So sure, today it might be fine for me to be transacting money back and forth, but if I receive money from someone, my friend pays me back for food, do I, as a personal individual, pay for software in order to check if it's okay for me to receive these funds or not before I try to deposit them on an exchange? Do I, as an individual person, get to communicate with all these different companies and compliance personnel and the like to say, yes, I want to confirm to you all that my funds are safe? You're not doing that. Who is doing that? Those are the exchanges. They're the ones that have all these partnerships. They're paying millions of dollars every year. The US government is paying millions of dollars every year through various public contracts that you can look at to pay for this data because it's useful to investigate them. I mean, you think of things that people don't have anything to hide. I mean, ICE, which is one agency in the United States that tries to go after after illegal aliens in the US and do enforcement for crimes, or even people who are just living here peacefully but without the correct visa, they spend millions of dollars every year. This is public knowledge, public data, on tracing blockchain transactions, predominantly on Bitcoin and Ethereum. So it's not really the case that you can just, with the non-fungible traceable asset, just accept money, because you're not just accepting Bitcoin that's the same as anybody else's. You're accepting Bitcoin that has a specific history with it, and you should know what the specific history looks like. You need to think about it as more of an art piece, which obviously becomes very difficult to use in everyday commerce if you need to use this tool you don't have in order to try and trace the industry prominence of it. So ultimately, it means that people are the ones that are going to get screwed. Exchanges are going to be fine because Coinbase gets to say, look, we get to try so hard and we have such good compliance. So all the coins that we get, if we send them to someone else, we're good. And that's by and large the way the industry works. But if you receive coins from someone and you're not doing anything wrong at all, good luck trying to communicate that to someone, even if you have done nothing wrong whatsoever, because you're ultimately not the one that's going to be paying the money. So it's, as someone who has worked myself for, in blockchain compliance, cryptocurrency compliance and anti-money laundering for a few years, and have seen a lot of these tools and noticed that they're not just a few people that have risk scores. It's every single transaction and every single address that you can look up and see the exact distribution of what funds came in and went to where and when it happened and what the specific number that's associated with your name for how risky it is. I don't understand how you can go from watching that to then say, okay, well, Bitcoin is fungible enough for me to not care. Well, the problem with fungible-ish is that people think it's fungible until it's not for them, and then they get screwed and they can't actually spend their funds. In Monero's case, you cannot do mass surveillance like this on Monero outputs. You cannot just say, hey, we have a list of every Monero address and output. There are no addresses. You can't just have a list of every output because you have no idea what the vast majority are used for. So you can't just have a database where you can query anything and assign different risk scores to things. You'd have to basically block access to Monero completely in order to try and censor that sort of thing, as opposed to just going against the most risky actors that you get to pick out of a completely open field for Bitcoin and Ethereum's case. So no, Bitcoin can be used fungibly, I guess, is maybe one way to say it. But by and large, Bitcoin is not a fungible asset. And you can ask any exchange out there if they use blockchain analysis to check the funds as they come in, and every single one of them is going to say yes. And if they're all assigning risk scores to specific addresses and outputs, I don't understand how it's a debate anymore as to whether Bitcoin's fungible or not.
Justin, I think you nailed it on the head. And as I mentioned earlier, as these types of forensics that are being used, these tactics, sort of data analytics evolve over time, we're going to see more and more of kind of a separation between virgin and non-virgin Bitcoins, for lack of a better term. And with that said, I'm curious to know, I mean, I think you already kind of answered this, but do you anticipate that certain, not just certain Bitcoins, but even units of Satoshis will be blacklisted entirely, or at the very least, trade at a lower price one day simply based on their history?
I mean, versus trading value, that's already happening, right? Because, so let's say I give, hypothetical example. I don't have these Bitcoin I'm going to give you, but this hypothetical example, I'm giving you 1 Bitcoin, but you can't sell it on any centralized exchange. How much is it worth it? How much is it worth it to you? Does the spot price that's on Coinbase Pro, does that apply to you if you can't sell it there? No, you need to go through some other method. You're going to probably have to spend money to mix it. You're going to have to spend money in order to go through some other kind of sketchy exchange. It's only going to attract people willing to buy something in order where they're going to profit on it in order to be exposed to that risk. Like the trading difference is already happening. That's already there. As it relates to specific blacklisting on your ability to transact on the Bitcoin blockchain, that by and large hasn't happened yet. So Marathon Digital Holdings, which is a large mining company, they have a mining pool. They announced a few months ago now, I think about a year or so now, that they in their mining pool were only mining quote unquote compliant blocks, right? They were only going to mine blocks that included transactions that were not going to or from certain high-risk entities, as reported by some of their friends that have these blockchain analysis tools. So that was that's the best case that we can currently point to as it relates to specific censorship for actually sending the Bitcoin transactions. Because again, if you're, your very small transaction fee is not larger than the cost of the U.S. government trying to sue them for sending money to a sanctioned entity. Having some involvement, even if it's not direct involvement, they would potentially try to argue. And again, whether it's winnable or not is up for debate. But no one wants the headache of potentially being involved with facilitating the transaction in North Korea, right? Mm-hmm. So those are real costs that are indirect as it relates to mining. And so they said, we are not going to mine those sorts of transactions. They got a lot of pushback. They ultimately decided to revert that policy. Whether or not they actually went forth and did so, I mean, who knows? I mean, that's just speculation. But there was a large mining pool that said they are not going to mine certain Bitcoin transactions because they're obviously non-compliant in their view. So I fully expect that trend to continue, where not only will it be hard to sell it to someone, mm-hmm. but you'll also have Bitcoin that is hard to be mined by anybody. And wow. I think that the premium to have it be mined is going to go up as well, because mining pools in the US or some other more stringent jurisdictions may purposefully say, hey, we're good actors because we don't mine these transactions like this. And so they're going to have to look to some other pools. And in the worst of case, what's going to happen is that all these pools will sort of band together and say, hey, we are not going to accept mined blocks that include any of these transactions. So let's say there's some mining pool in Russia that, oh, congrats, they found the next Bitcoin block. The rest of the world might ignore it and just start from scratch, and not all of those transactions to be confirmed. This is a bit of a hairy topic too, because in theory, with any of these networks, you can arbitrarily decide not to include any transaction you want. You might just say, hey, I don't like the way this TXID looks. I don't want to include it, right? Like anyone could do that. And so critics of this idea will say, hey, Monero has the same problem because any Monero transaction could just not be included for whatever reason. You can just make up a reason and not include it. But I think in practice, there's a huge difference. There's a huge difference between just randomly excluding transactions because you feel like it versus, hey, this Bitcoin address that's associated with this transaction is on the US sanctioned list, so I'm not going to include it. Like, there's a very big difference in just, hey, I just feel like it versus this is a sanctioned address. So it's not that Monero wouldn't possibly be subject to certain types of pressures like this, but the bar, again, in terms of the censorship resistance that Monero has to prevent against this sort of thing is significantly greater, at least in my view, in practice.
So Justin, a lot to unpack there, and I want to keep it high level, just be cognizant of your time. Wouldn't 51% of miners have to agree, or not, I don't want to say collude, but agree in order to, let's say, decide, hey, this mining pool in Russia is not allowed to produce this block?
For that certain case, largely yes. You would largely need the majority of the mining pools to say, yeah, we're going to specifically invalidate these transactions. So I don't think it's going to start there. I think that would be the extreme case that may be something we get to a decade or so from now. I think you're going to start more with mining pools that are in the US and other like-minded jurisdictions are just not going to mine those transactions. So they'll be slower to confirm, they'll be higher risk, but things of that nature. That's a safer starting point, as opposed to trying to literally like work backwards in the chain to specifically remove blocks. I agree that is not the first step in the censorship process.
Understood. And you said that the blacklisting and even Bitcoin trading at a lower price is already happening on certain exchanges. Can you give us some examples? I actually haven't read anything, and maybe I haven't dove deep enough into where that's actually happening.
Well, I mean, the easiest one to measure is what's called a no KYC premium. So there are some exchanges that have loose registration requirements, or loose way to block certain things, and so one example, I mean, it's not a centralized exchange, but it's called BISC. It's a decentralized exchange based on the Bitcoin network. It's been around forever. I've been by forever since like 2016 or so, and you can see the price of Bitcoin there versus the price of Bitcoin on Coinbase or whatever, and usually there's a difference. And that's one example. There's not too much volume there, but that's usually one of the first places I start.
Got it. And I feel like you and I could probably go for another 2 hours with this. This is a lot to unpack. I wanted to stay focused here. How many developers and programmers are actively working on Monero at any given time?
Active, I would say a few dozen that are very active, and active at least on a yearly basis, hundreds. And that's just on the main protocol. You also have the GUI, for example, which attracts UI developers that might not be working on the main, the core protocol, or other various implementations like a Rust or Java or some other implementation of Monero that would have separate. So just on the core, I'd say a few hundred a year, and a few dozen that are active like on any given time on the Monero Dev, IRC, or Matrix channels.
And can any developer just come and join the community?
Yeah, I mean, certainly. There's no company to tell you no, right? You don't have to apply for a job. It literally is, hey, I'm going to make this pull request, or I'm going to make this issue, and let's have a discussion about it. And I mean, that's how the vast majority of developers get started in the Monero ecosystem.
And you mentioned earlier the shift from CryptoNight to RandomX, and how there was a lot of talk on the community, a lot of back and forth, and ultimately it was decided that you guys are going to shift over. I'm curious to know more specifically how the community decides on big decisions like that. Is there a voting process? Is there a DAO? Is it come down to a group of individuals ultimately that pulls the trigger? How does it work?
Yeah, that's a good question. There is no formal DAO process at all. Like there aren't a certain set number of votes. I mean, people can of course just make a poll and see what it looks like, but that's not a binding decision, right? So it definitely is humans that come together and have arguments that they go back and forth about. And this particular one had some conflict, right? People said, okay, well, ASICs are inevitable. Let's just choose them now instead of later. And there are a small number of people that had that opinion, including Fluffy Pony. And then, not that I want to speak for him, of course, but that's my impression of his opinion at the time. And it ultimately was just through all sorts of discussions trying to feel out what everyone's opinion was. And it wasn't an exact science of just let's just vote and get it over with. It was definitely months and months of discussion in order to figure out what to do before this is ultimately what was decided upon. I mean, ultimately, at the end of the day, the Monero core team is the one that has access to the repository. So they ultimately are the gatekeepers as on what gets included or not. But in practice, it's far more complicated than that because, if they were to include something stupid, you'd have all sorts of people be mad and you'd probably do a project fork if it truly was bad.
Justin, are there ways to buy and sell XMR in a fully decentralized manner? As far as I know, and I'm learning more actually, I know now that there are, but before this AMA, before prepping for this AMA, I actually thought that the only way to really exchange XMR for other cryptocurrencies is going through a decentralized KYC exchange. So what are some ways that we can stay away from that and kind of stay on, more decentralized?
Sure. So if your idea is not using a centralized exchange at all, you're trying to get rid of what's called counterparty risk. If I give you money that you can't just run away with it before completing the trade, your best options are BISC. That allows you to trade Bitcoin for Monero and Monero for Bitcoin without relying on a trusted party to facilitate that trade. And then also you can use Monero atomic swaps, although those have low volume, they exist. They also exist between Monero and Ethereum as well. Again, low volume. But those are ways for you to conduct a trade so that someone can't just steal your money before sending you the owed Bitcoin or Ethereum that's needed. So there are definitely ways to do that. But in practice, the most common way that people will do it is they'll accept some counterparty risk for now because the volume and liquidity is a lot better. And they'll just trade through, it's an exchanger like within Cake Wallet or something where there's no account needed, but you'll be able to do the trade. And that's more of a reputation trust, that they won't take your money than a protocol implementation. So hopefully they can move to atomic swaps soon or something that would make it so they couldn't just take your money.
Mm-hmm. And what if government, I don't know if this is actually going to happen, but what if governments decide to come together and say, we don't like Monero, it's bad, we want to ban it altogether, centralized exchanges, ban it altogether. There's really no fiat to, there's not really enough fiat to Monero gateway as far as I'm concerned. Although you said that you could use Cake Wallet, but what do you see that breaking, or do you see that unfolding? And if so, what does that mean for the future of Monero?
So I think to some extent that's a risk. I mean, people definitely want to be able to buy things through convenient on and off ramps, but I would say there's two things apart here. Number one, if you truly are concerned about authoritarian governments banning access to money, well, I mean, you really should be using Monero because it's the only thing that has any base level protection against this type of censorship. So Monero is literally meant for high degrees of censorship resistance. So if we were to get there and Monero isn't able to present a strong defense in its community against this sort of thing, well, then ultimately Monero would have failed, right? It's failed at what it's supposed to be the best at. So let's hope that doesn't happen. But the Monero community has spent years, since inception, designing Monero in such a way that you can't predictably do this. So it would suck if that's what happened, is Monero was ultimately dead, so to speak, after this. But that is literally a built-in assumption for how Monero works. It's trying to prevent against those sort of cases more than any other coin. So in my opinion, Monero is actually best posed in those sorts of authoritarian situations compared to other coins.
Love that answer.
One can hope. I mean, the whole point in trying to hide all this stuff, the whole point in using decentralized mining and things you can't just ban hardware access to, it's meant with the assumption that, okay, well, China says you cannot buy ASICs, that would impact the Bitcoin miners there, but they can't really say you can't own a CPU, right? That's a very different assumption. So Monero has designed its protocol in such a way, or its community has designed a Monero protocol in such a way that it's very, very difficult to do that. So hopefully that won't happen. And then also just for governments, I mean, governments want people to use centralized exchanges, right? These are people that they can regulate and say, demand information from. So if they say, sorry, you can't use Monero on a regulated exchange, then like, oh darn, I'm gonna have to trade with this unregulated entity, you know? Like, oh no, there's no longer gonna be a SAR filed every time I touch Monero. Oh no, what will I do, right? Who's the real person that loses out? The government, because they don't get the data. So I don't expect them to really actually do that either for that reason. But I mean, time will tell. Governments do all sorts of stupid things sometimes.
I love that answer. And, what are some ways for us? You mentioned the Monero GUI wallet, but what are some other ways for us to safely store Monero? And tell us a bit more about Cake Wallet.
Sure. So yeah, the official wallets are just for desktop. They are the official Monero GUI. And if you like the command line, which I actually do for desktop, you can use the command line. That's definitely the one for power users. But I work for a company called Cake Wallet. It is free. It's non-custodial, so you have your full keys. And it's also, but we call it Cake Wallet a full wallet. There are some Monero wallets out there that will give your private view key to an entity to help speed up scanning, so it's a little bit more convenient for you to receive funds. But that loses a lot of the benefits of Monero's privacy, so you really should use something where you retain your view key. And so Cake Wallet, Monero.com are mobile only. They work on iOS and Android. You can download the APK if you like, so you don't have to go through a store. And other wallets for another common Android wallet is Monero. That one works again through either an APK or the Google Play Store. And there's a few other desktop wallets out there, but I recommend, I mean, I'm biased. I recommend people start with Cake Wallet for mobile or the Monero GUI for desktop, but that seems to be what most people use.
And is the Cake Wallet, it's non-KYC, correct?
Yeah, so it's completely non-custodial. So you download the app, and we literally just make an app that allows you to randomly generate a number effectively, right? Mm-hmm. We just make it so that you randomly generate your private key, which you then use to sign your own transactions. Right? There's no account whatsoever with the wallet.
And from what I understand, you're able to swap XMR for other major cryptocurrencies?
Yep, the most common trades are people trading Bitcoin for Monero and back and forth. That is through an instant exchanger, so there is some trust involved that the other party won't steal your money. But we launched Cake Wallet in 2018 in January, and so far no one ever has reported anything. So it is a reputation protection, sadly, but it's never happened to anyone else. So hopefully it doesn't happen. And that doesn't require an account or other info either. It's just an instant exchange.
And is that mechanism fully anonymous, or is it a bit transparent?
I mean, if you're trading like Bitcoin for Ethereum, I mean, they're going to know your addresses, right? Mm-hmm. But they don't know, like, there's no need to register with an account with your name or email or anything like that.
And Justin, I want to get to our researcher questions here in a moment. A couple more from me. What would you say the main differences between Monero and other privacy coins like Dash and Zcash?
That's a good question. I would say it's growing more and more over time. Dash doesn't position itself as a so-called privacy coin anymore. Dash is basically, well, it is a Bitcoin fork effectively, and it has an optional coin join feature on top of it, but the coin join functionality is very primitive compared to the best options on Bitcoin now. So it's like Bitcoin with worse mixing options than Bitcoin. So it's not really a privacy coin, so to speak. They've focused more on quick commerce spends, really since inception. So that's how they like to view themselves. By default, there's no real privacy at all compared to Bitcoin there. Zcash is different. Zcash, they just changed with their network upgrade 5 that happened last month, and that switches to an orchard shielded pool using Halo 2. So that will it uses a different way to obfuscate potentially more information from the transaction graph side. But Zcash historically has floundered a bit for actual privacy uptake of its features. So we'll have to see what happens with them in the future. I mean, typically you'll have 100 times or more private transactions in Monero per month than Bitcoin than Zcash. But we'll see what happens with their adoption. They're trying to push forward a little bit, but you can still send a like Bitcoin transparent transaction on there. So we'll see what the exchanges do.
Justin, is there anything that I haven't asked that you want to talk about? And also, what is your long-term vision for Monero?
The biggest thing I want to stress with Monero is it's not a project that tries to do everything. It just tries to do one thing very well. It just tries to be cash online. Like, it literally tries to replicate as many properties of cash as possible in a digital sense. And it doesn't try to do everything else. You know, you can incorporate Monero as an asset into your protocol, for use. If you want to build a DEX for Monero, you're probably not going to build it literally on Monero through a smart contract, but you can incorporate XMR as the asset into your DEX through some sort of swapping thing. And Monero is going to be a very useful asset in that DEX because it's going to be the only fungible asset in that DEX, right? So I think one of the reasons that Monero has done really well in terms of growing its community and being one of the few projects that has remained super relevant since it started in 2014 is that it just has this very clear vision and just keeps, it has proven that the community behind Monero will continue to competently iterate, develop, improve on it so that it's just something you can reliably use for peace of mind transactions. And so one thing I want to stress to people who might think of Monero as like any other privacy coin or something out there. I mean, it's in terms of adoption, it really isn't close. Monero has more private transactions than every other cryptocurrency combined, including all the privacy coins, including all of the mixing on Bitcoin and Ethereum. Like, Monero's scale is significantly larger when it actually comes to private transactions. So if you are getting lost in like this is all confusing and there's so many different options and whatever, like, I'm not trying to say don't look at the other options, but pick Monero first and settle there and then start learning. Because if you're gonna just keep circling, not knowing what to choose or whatever, you're probably gonna confuse yourself. When in reality, like, the entire privacy market share, so to speak, is already all in Monero.
I love that. And thank you again, Justin. That was a great breakdown. Lots to unpack. I'm probably going to go back and listen to this AMA again because it was a very info dense broadcast on our end. And we really appreciate you being here. I'm not going to let you go just yet. We have a few community member questions that are going to come in right now. I want to start with Aisha first, and then we can go down the line.
Thank you, Noah. And thanks, WCT, for bringing or for arranging such an amazing AMA here with Monero. Thank you so much. Now, coming towards my questions, there are rumors that the Cypher trace software commissioned by Homeland Security is able to trace Monero transactions, and that anonymity is somewhat compromised. How true are these allegations? And if true, what is the team doing to ensure that Monero stays 100% private?
Thank you for the question. It is true that they made an announcement about it. It's also true that they have, they won contracts. Other recipients of contracts to look at Monero, or likely look at Monero, include Chainalysis and Integra FEC, two other forensic type companies. I mean, the fact of the matter is, nothing is 100% private. And so they are, like they looked at Bitcoin, they're trying to find limits with they try to find limits with Bitcoin's privacy. I'd say they've largely succeeded, even though their tracing isn't 100% perfect there. They've done a pretty good job. And it does not surprise me at all that people are receiving contracts to look at the Monero blockchain either. I mean, the whole reason Monero has all of its privacy features is because we assume people are looking at the blockchain and trying to make sense of it. So we're trying to make their life really hard. So I interviewed the CipherTrace CEO when this came out with Sarang Noether, one of the Monero Research Lab contributors. We tried to ask more specific questions, and our impression is that this would potentially be tried to use against targeted, targeted cases. But ultimately, we're guessing. Like I have not used the software, right? So ultimately, I don't think this is anything people need to panic about. It's certainly not the case that Monero is nearly as remotely traceable like Bitcoin is, but it's not perfect. And so I recommend people start with breaking Monero, specifically the poisoned output episode. I mean, work your way up there, but if you already are familiar with Monero pretty well, then you can jump to that one and start there. That'll give you an idea of what they could be trying to do. But it's not the case that they just like found a tool, or at least I can 100% confidently say they have not just like found a tool and broken cryptography to make Monero as traceable as Bitcoin, because there's no way that's true.
Understood. And you mentioned about poisoned outputs. I also read about it in the series Breaking Monero, where Monero dev stress tested and outlined vulnerabilities for cryptocurrencies. And a pseudonymous developer called Sereno Etherlinks poisoned outputs to how authorities might trace the sales of the banned books to the society by making purchase and track the transaction to see where funds end up. Can you briefly explain if poisoned outputs are creating vulnerabilities for Monero?
Sure. So poison outputs remain relevant, even with Monero's ring size of 11, which is, I think, larger than when we first filmed that. And even as it's going up to 17, I'm sorry, 16, poison outputs remain a possible attack to your privacy as you're using it. If I give you money, for example, with Monero, I know what specific output I gave you, so I have better insight over how you might spend it than if I was just a completely random side participants in the network. So people who have very, very specific and very strict privacy requirements certainly should know what this is, and they should be very careful with the counterparties they're transacting with. But I don't want to worry someone who's going to act like say, oh, well, this sucks, I'm just going to use Bitcoin instead, because don't do that either. So I guess to answer your question, start by watching the video. To everyone else, watch the video first, and then and definitely be aware of it as you use Monero. Poison outputs are something that can be used in some cases to try to learn more information about your transaction, and so that's why we're trying to be upfront with communicating those to Monero users.
Got it. Okay, last question from my side. Does the Monero team plan to deploy any sort of anti-money laundering or anti-malicious activity mechanism to prevent illicit activities without compromising the privacy of its user base?
Thank you for that question. The answer is no. I mean, Monero is not a regulated entity. Monero isn't an entity at all. It's code that people run, and there are no plans whatsoever to build in like a third-party oracle or something that says, hey, this company gives authority to censor transactions on the protocol itself. There's no plans whatsoever for that, and it will never happen. So because there's no need for that to happen, there's no need to use a third party there. So exchanges that offer Monero will continue to follow their compliance obligations. They will report things to the US government or whatever governments they have as needed. But the protocol itself is not a regulated financial institution or money transmitter, so there's no need to add any of that. Nor are the developers who put out the code the ones that are, running these services either. It's on the end user to run it. So there's effectively no chance of that ever happening.
Wonderful. Thank you. Thank you for answering my questions.
Thank you, Aisha. Next up, we have Western Beast.
Thanks, Noah. Great explanation. The first question is I'm asking about the FFS and the CCS protocols. What was the reasoning behind changing your name from the forum trading system to the community crowdfunding system, CCS?
Good question. The joke answer that I sadly can't take credit for was we learned that FFS stood for something else as well. No, that's not entirely true. But the old system used like a very bog standard forum software that was completely unoptimized for for a community crowdfunding type system, and so it just needed to go. So it was replaced with a significantly improved CCS. We took the opportunity as well to change the name. So it is now, and has been for quite a few years now, the Community Crowdfunding System, or CCS. And that is not the only way that people will raise money to work on Monero-related projects, but it is one of the main ways that people will do so. And to date, people have raised more than $1 million through, I guess, the FFS and CCS combined.
All right, great answer. All right, here's my next question. On your CCS proposal standard flow rather, I saw on point number 6 that the requirement for a loose consensus reached by a community after necessary adjustments have been made. Now, I want to ask, in your CCS proposal standard flow, what are the requirements for a loose consensus reached by your community after necessary adjustments has been made to an idea brought by an individual or a team?
That's a really good question. And the actual answer is that it isn't especially well defined. So ultimately, the way the CCS works is it is administered by the Monero core team. Again, the group of individuals who also do the maintenance of what gets incorporated into the main Monero code base. And so ultimately, whatever is approved there, and this is a little bit more hands-on than the actual main Monero code as well. Whatever is approved to be moved to funding required in the CCS system is ultimately determined, or in the determination of the Monero core team to do this. So in practice, what this usually means is they will, someone will open an issue for something they want to move to funding required to raise donations for, and the core team will usually go to or open several community meetings, or someone will be running a community meeting on this topic, and so people may give feedback on it there. The idea basically is the core team just likes to have community input on these things before they advance them usually. But ultimately it is not a strict checklist that says like this needs to vote, therefore this. The setup is a little bit different than you might see in most DAOs. I mean, in DAOs, the money usually is already there, and you're determining whether to spend it, or you are determining whether to pull it from a certain fund or something along those lines, or you're proposing making a consensus change. In this case, it is literally, should we allow this proposal to just be moved in a way where it says it's open for donations, right? It's not the case that we're actually moving money somewhere. So it is a little bit different. It's just, hey, is this something that many people think is a good idea? And if people say no, people can raise money a different way. And if people say yes, then usually it's moved for people to be able to raise money there. But it's not an exact science there. That one definitely is subjective in the ideas of, or it's subjective based off what the Monero core team feels is appropriate.
All right, that's a great answer. This is the final question from my end. Please, can you explain the concept of permissive licensing and restrictive licensing, and how often should a team behind an idea update the community when it works?
That's a good question. So open source is weird. Actually, so there's actually two main camps. One is a lot bigger than the other now, but there's two camps as it relates to open source licensing. One is permissive licensing, which is what Monero falls under. Monero is under the GPL3. No, no, it's not the GPL. It's specifically not the GPL. BSD3. Sorry, Monero is under the BSD3 license. which is a permissive license. This basically means you can take the code and you can use it, and you can basically use whatever you want to use it for, as long as A, you don't hold us liable, or don't assume we signed like a contract that it should be used for or relied upon for something. And you need to give us credit for the portions we worked on. That's basically the license that Monero has. A restrictive license means that there's some restrictions on what you can use it for. And there are some projects like Zcash, at least in some of its parts, and like some other open source projects that say you can only use our software with these certain rules. And the rules in the most common case are something called a GPL. So GPL is the license. This basically means that you can only use this software if you keep the same license, usually. So you have to maintain the same license that makes it open to people. You have different camps. Some open source proponents, like me, prefer the permissive route. I think of open source, I think of code available to use whatever you want it to be used for. Other people say, hey, this isn't fair. If I make something open, I want to make sure if someone steals it, it also remains open. So they may prefer to do a license that is restrictive or has this copy left permission. So largely, the Monero CCS encourages, but usually does not require permissive licenses as it relates to all of the projects that it can be used to raise money for. But that being said, in order to contribute to the Monero code base, you need to contribute in a way that's compatible with the Monero, the BSD3 license, which means you can't contribute code to Monero that has restrictions on it. You have to allow Monero to incorporate in a way where everyone else can still continue to use Monero's code without restrictions. So I guess that's kind of like the high level overview of a restrictive or permissive license. And this has actually been a debate in open source for decades.
Justin, I really appreciate your answers. Now I know why Monero is such a great project. Over to you, Noah. Thanks a lot.
Thank you so
thank
much,
you,
Western
Weston.
Views.
All right, we're going to go with 2 more questions. Justin, I know you have to go here soon. I want to be cognizant of your time again. Say it, let's go with you, and then Venice will wrap things up.
Thank you, Noah. Thank you, Noah. Glad to have you here, Justin. Okay, so I was wondering that are the Monero services, affected when the routine network upgrades are taking place?
I'm sorry, can you repeat that one more time?
Yeah, I can. Are Monero services affected when the routine network upgrades are taking place?
Okay, good. So how is Monero affected when routine network upgrades happen? Is that correct?
Yeah.
Okay, so the large answer is no. So people do need to update their application in order to be able to send transactions and communicate with the rest of the network under the new rules. But no, usually there is no downtime whatsoever. The last few have gone incredibly seamlessly. The idea is in advance of the actual hard fork block where the new rules take place, you will update your software and it'll work just fine right after. And if you forget to update your software, well, you can't send a transaction until you update your software. Your funds are never at risk. You can send funds this first block that's available, so you don't need to wait for like a few days or whatever. Like, it just will continue to work. But do make sure to update your software. If you use a mobile wallet like Cake Wallet or Monero.com, that'll be an auto update for the vast majority of you if you use like Google Play or the App Store. It just keep auto updates on or update it in advance, and you'll never have to think about it.
Understood. Moving to my next question. So please tell us about your future plan for developing Havino, which will be a non-custodial decentralized exchange, which will be developed on the Tor network and the Monero network.
Yeah, thank you for asking about Havino. So Havino is a fork of Bisq. I talked about that a bit earlier. So whereas Bisq operates on the Bitcoin network. Havino operates predominantly on the Monero network. So every pair will be denominated against XMR. This will include fiat pairs like USD, euros, etc. that you would do with like bank transfers and stuff. And it is software that allows two traders to trade with each other directly without any third party and with minimized counterparty risk. In the case of a dispute, there's an option for an arbitrator to step in and say, let me evaluate the situation. And if they, as the arbitrator, would decide whether to side with the seller or the buyer. And of course, it's important that the arbitrator is sensible, so you can't just have a completely random person. Those are somewhat handpicked. But that has been going on in development for about a year. I'd say actually a little bit more than a year. It'll probably take 6 to 12 more months of development before that's really out. But it is uses Tor in order to have better privacy on matching matching people to each other to conduct a trade. And it operates with Monero as the base pair so that you don't need to go through a transparent asset when trying to trade in and out in dollars and the like. So time will tell how much volume is here. I know that they are hoping to at least get as much volume as BISC, which would be very cool. And they've also put in a lot of time and money in designing a new user experience as well for it, because one of the criticisms of BISC is that, or common criticisms at least, is that the user experience is definitely built for devs and is not exactly fun to use for most people. So you can see in some of the videos they have showing the new design that they built as well, in addition to changing some of the code of the Monero protocol. But if you want to follow Havino, that's not directly a Monero core team initiative. That's just Monero community initiative. You can follow that Havino Havino.exchange is the matrix group for that.
Okay, and will Havino be only accessible through Tor browser, or it can also be accessible through normal browsers?
That's a good question. So you would not actually access it through a browser at all. It would be through, you would download a dedicated desktop application for it, and at least for the native main implementation, and that application would route the traffic through Tor automatically. In theory, people could, of course, make their own front-end interfaces for it as well, but that is the main one, a dedicated desktop app, just like BISC has a dedicated desktop app.
Understood. A final question. Article I was going through, it's mentioned that a challenge that Monero is facing is a Janus attack. Would you please elaborate on what exactly this is and how the Monero team is fighting against such attacks?
Yep, really good question. Janus attack is one of those super advanced attacks that we're aware of and have options for mitigating, but have not been implemented. So it certainly is important for you to know. If you are receiving Monero if you're receiving Monero, the sender of a transaction who tries to learn more information about you could craft the transaction in such a way that you only receive the funds if another certain condition is true. And that other condition is basically that the other address that they sent it to, that they incorporated, is also owned by you in the same by the same private key. So the most common application or the most likely situations where this would come into effect. Let's say that you use the same exact Monero wallet to receive payment from your employer, and you also had a side hustle of running a competing business, let's say. Like your employer could send money to your business address, again with the same, assuming it's the same private key that generated both addresses, where you would only receive it if you also own the address that they use to pay you. That'd be one case where they say, hey, these two addresses are owned by the same private key. Or let's say an exchange uses subaddresses with only one private key, and they suspect that your address is an exchange address. They can confirm the suspicion by sending money to their own account in the exchange, and the money would only appear if your address is also held by the same private key wallet. So those basically, it's a way to Janus attack is a way for a skilled attacker to potentially associate subaddresses together. Again, only if they share the same private key. So if you used two dedicated Monero wallets, each with their own mnemonic seed, then you don't need to worry about this. That's one mitigation. Another mitigation, I mean, there are other mitigations that are proposed, but they aren't live. So one that Monero wants to change in the long or midterm future is something called Janus and Seraphis. These are complete plumbing pullouts and changing Monero addressing completely, which would involve an improvements to remove this entirely as an issue. And another option is there's some formalization about how you could do this today without a consensus change, but it hasn't received wide adoption. So there is a Breaking Monero series, Breaking Monero episode on Janus with diagrams and things. So if you want a further explanation on this in particular, start there. But that's, I guess, about the best best overview I can give on what, sorry, not Janus, on what the Janus attack is. I probably said Janus 100 times there, but what the Janus attack is, Janus. Search for that on Breaking Monero, and you'll find. Well, I guess you get to listen to me talking about it in more detail.
Surely I will. Surely I will. Thank you for explaining that very nicely. Thank you. Thank you so much. Over to you, Noah.
Yeah, thank you, Sayed. Great questions. Venice is going to wrap things up, and then we'll go from there. Thank you, Venice.
Yeah, thank you so much, Noah. Justin, I have a couple of the questions. Here's my first question: as there are different programming languages, libraries available for free to use for developers, I wanted to know that are these libraries examined by the Monero team, and do these libraries are also included in the vulnerability response process and subsequent bounty reward also associated with them?
That's a great question. Thank you for asking it. The answer, by and large, is no. So anybody can run with can make their own software that is built on Monero. It's an open network, and the Monero vulnerability response process. This is through HackerOne. It's a bounty program for white hat hackers. If you find an error, you can report it there, and you can get rewarded. That only covers the specifically named repos. I believe it primarily includes just the Monero and Monero GUI repo. It may include some others as well, but those are the two main ones. If someone tried to do like a Java implementation of Monero on their own, that would not be covered. That would be covered by anything that particular developer would want to put up on it for security subsidy. And it's also not an official package as well. The only official implementation of Monero by the core team is the Monero C++ implementation. And while others exist, they are done by various community members, and they likely don't come with any warranty at all. In practice, if you wanted to build something in production on this, I'm sure you could pay someone to get a warranty or support for these sorts of things, but it certainly doesn't just come out of the box for free.
Okay, that's awesome. And here's my last question. As Monero also has an offline backup feature available where account is created in RAM. So does it mean details of account on RAM will be removed because of the volatility of the RAM? And where will be the account details saved on that system?
Sure. So I'm actually not 100% sure what what specific feature you're talking about there, but I can say largely You can make a Monero wallet that you just discard all details of immediately following. So the way the wallet structure usually works, at least for the official Monero wallet, Monero CLI and GUI, is that they will store your wallet details in an encrypted file on the desktop straight there in some .wallet file. And you need the password in order to decrypt it and make sense of it, including your private keys that are encrypted there as well. There are ways to generate Monero wallets where you don't actually even store the file and it's entirely in RAM, but I would need to look into what specific, what the specific process would be there with what you're trying to do. I haven't done something like that in at least a while, possibly ever.
Yeah, I was asking about offline backup. It's mentioned in the user guide that how can we create offline backup, and it's mentioned that we can switch off the computer once the account is created, remove the battery if there is one, and leave it physically off for a few hours, and our account will be saved in that system. We can have a offline backup as well.
Okay. So what I recommend for most people, this doesn't, I mean, it works in most cases. You can put your computer offline. So this is something I have done. I have wiped my computer. I have installed Ubuntu. I have loaded up Monero offline. And I have generated a wallet offline. And I have saved the mnemonic seed. This is a series of 25 words that you can use to restore your Monero wallet anywhere. It basically contains your private keys inside of these words. So you can save that, and then you can wipe your computer again. And that can be your backup as well as just these words. You can restore that account with just those words. Now, if you need to have like labels saved for what address is used for which, or what transaction is used for which or that, then you need to back up your wallet file specifically. Again, if you don't back this up, you'll still have access to your funds with the seed phrase, but you won't have all the labels. So you need to save the wallet file if you want all the labels, because those aren't stored on the blockchain ever. They're just stored on your specific device you initially send with. So there are ways to send Monero transactions offline as well. You basically pull in data on the Monero blockchain. You sign a transaction, you put it on like on a disk or something, and you pull the disk out, and then you load the disk up onto your node and then broadcast it. Those things are actually possible, and many people do something like that. And there are guides available if you truly want to create, backup, load Monero wallets completely offline.
Understood, and that's really awesome. Thank you so much for explaining all my questions. Thanks for everything.
Hey, thanks a lot, Venice. Justin, that was probably, in my opinion, the most informative AMA that we've had on this channel. Some might debate me on that, but I'm gonna die on that hill. I really want to thank you again for being with us. I'm glad that we got to connect on Twitter and we were able to set this up. Monero is one of my favorite projects in the space, so being able to have you come on and talk about it has been a great honor. If there's anything you want to leave our community with, go ahead and do so now. Otherwise, I wish you all the best, and I hope that we can stay in touch in the future.
Awesome. Thank you so much, Noah. Again, this is totally awesome. Really great community you have here. And I'm not here to sell anyone on any investments at all. I'm here just to say, if you need to actually buy something with cryptocurrencies, you should probably prefer to buy it in Monero, so you don't need to worry about everything they use your money for after you give it to them, because that's how blockchains work with everything else. So that's my main ask of you guys, is if you are actually buying something with cryptocurrencies, you should prefer to use Monero. But thank you, Noah. I appreciate it. I really, really do. And I will certainly share this with the rest of the Monero community as I can with the recording. I think it was a great set of conversations, and you and your team had wonderful questions. So thank you so much for that.
Yeah, I love that, and I will send that over to you as soon as the AMA is over. Community members, as Justin just said, I mean, Monero is a great, solid, robust, private store of value and in use of kind of making transactions. It's hard money. With that said, everything that you hear on Whale Coin Talk, as we always say, is educational purposes only, right? We don't give financial advice. Always do your own research and invest what you're willing to lose. We are here as a podium to teach you about cryptocurrencies, blockchain projects, and various protocols across the space. So thank you so much for being with us on this special AMA today. It was an honor to have Justin on, and we look forward to having you guys on in the near future. So this is Noah signing off. Take care, and everyone be safe out there. Bye-bye.